Right. So then let's go over to investment proposition, right? So tell us how you approach the investment proposition. You mentioned earlier on that you have esoteric investments, to use your word, for some of the clients. How do you approach this? Is there a centralized investment proposition or central service, and then other things added depending on clients' need?
So I maintain there's a couple of people that argue with me, but I maintain that we don't have a centralized investment proposition.
Right.
So there are days where I wish we did, frankly, because it would be a lot easier for us as the advisor. But I'm not a big one for making the advisor's job easier if it means not doing the right thing for the client. I know it sounds a bit holier than thou, but a lot of clients come to us and they have their own views, they have their own desires as to what they want to do. And look, if those views are really wacky, then we will tell a client, and we're very happy to debate with a client if we think they're going off on some mad scheme. But a lot of the clients we deal with are actually from financial services, but it's just different bits of financial services. Although we do have some advisors that we advise actually. And so we're very happy to work with a client to build a portfolio, a completely bespoke portfolio for them with their input. We've got those clients on one extreme. On the other extreme, we've got clients who just say, look, you guys know what you're doing. Recommend the best thing for me. And so we have a broad range of investment solutions, but if you looked at sort of that usual bell curve distribution, the guys in the middle, they're going to be largely on a platform. They're going to have some low-cost access to global markets in the most efficient way we can buy it for them. That might be a model portfolio service. It might be a multi-asset fund, dare I say, a Vanguard Life strategy. But a lot of them will have some kind of MPS service around that. Depending on their preferences. So there might be some active MPS model portfolio service. There might be ethical if that's their particular desire, or social impact investing. But that's more of a satellite approach. So we would tend to have satellite themes around a core passive approach that's buying market returns. Well, what I will say, I mean, on the fixed fee side, when we set up 5 years ago, we would ask every single investment manager, right, will you offer us a flat fee option? And most of them said, well, no, that's crazy. Why would we do that? We make more money on a percentage. Why would we ever do it? And we kept saying to them, again, with our example of 1 million and 10 million, you don't have to ever know the client. You're just going to give us a fund template that will be applied on a platform. Why would our client at 1 million pay you 0.2% a year and at 10 million pay you 0.2? You are doing... You've no additional risk in their case. I mean, it's even more crazy, in my opinion, than advisors operating on a percentage basis. It's absolutely nuts. And 5 years ago, there were a few that we found, and we were happy once we'd done the due diligence, and even some bespoke managers that would operate on a flat fee basis, but not many. But there are more and more, and that's really encouraging for me. 5 years down the line, there are many more than we started with 5 years ago. Obviously, Beastfolio being one of those, which is really exciting for us, because actually for our clients, our typical client, the more that can be paid for on a flat fee, the more efficient their portfolio is going to be, the better their net returns, so the better a job we're doing for the client.
I guess the question I wanted to ask then is, so you're dealing with very wealthy clients. The core of the portfolio proposition is low cost capital market. Yes, you would have maybe, I assume, some sort of EIS type product if that's needed for the client. But do you get pushback from clients on this? Like, I've had all sorts of arguments. Low cost is too low cost. It's too simple. Or do you get pushback from clients on these things, or no?
Yeah, we do. We do from clients. I mean, if you look at the marketing budgets in financial services, The
Right.
big spend is the big active managers. Those are the big
Huh.
billboards at Waterloo Station, whilst
Right.
everyone's waiting to board their trains. I mean, they're not in the same numbers anymore, but they certainly did do. And so clients do absorb that. We're humans, we're susceptible to marketing. If we weren't, then companies wouldn't spend so much on it. And so that kind of message is in a lot of our clients' minds, at the back of the mind. What if I could do better? What if I could beat the market? Or what if I could invest with someone that can beat the market? And look, the active managers we use are at best, I would say, level pegging with markets and with their passive equivalents. We don't have any that are tracking below at the moment. But we all know, all of those of us that are in the know that all the academic literature says that actually you can't outperform markets. And it amazes me that firms continue to pretend otherwise, actually, on the advice side, less so on the fund manager side, because that's, they'd be destroying their own business model if they did. But we recently took on a client of a well-respected mid-sized firm, big breadth and depth of bench of professionals on their investment side.
Right.
And you look through the portfolio, and it's all the funds that are top performing, have been top performing in their sector, all first quartile, all 5-star rated, but it's all backwards looking. So all their clients are getting is everything that's done well in the last 3 years.
Yeah.
Now we know, because the research tells us, that those funds are the most likely to mean revert and underperform over the next 3 years. But they're relying on being able to cycle out before that becomes apparent to the clients, and just constantly cycling into the next best thing. But you're always cycling from, what hasn't performed very well because it was, you didn't catch it in time, you didn't catch it before it performed,
You're selling
into
low,
the next thing, which isn't good. Yeah, exactly. You're just constantly turning over the portfolio. So it leads to a really interesting conversation actually with clients, and there is a place for active management if clients have particular themes that they want to pursue, then very often active is the way to go for that. But it would tend to be driven by a client's preferences.